Guess who's back? Back again. Rocco's back. Tell a friend. Guess who's back? Guess who's back? Guess who's back? Guess who's back? The market's also back a little bit today. Kind of a little bit of disappointing fade towards the end. A lot has happened yesterday and today. As I was saying, I was pretty much expecting a distribution mode, but we were in such a long ramp up that it actually gave up a little bit more, a tad bit more than we expected. It's actually within 2% of the target. But we'll take a look at all the charts. A nice rally, though. Today, we'll take a look at the charts and what it all means, and specifically what areas today really moved and were supported. So let's take a look. Tuesday, August 6th, 2024. Let me share my screen here. So what happened today? So the big stuff that moved in multiple sigma moves was Brazil and real estate. Okay, so we'll look at the charts of both. Are they leaders? I know Brazil's not. Real estate has been a massive leader, so I'll always try to focus on this in terms of rotation from the investor dollar standpoint. Is it going into a weak asset, or some being a continuation? Okay, volatility collapsed. Okay, it depends on what you look at. It could be dollar VIX, front-month futures, VXX, VIXY, midterm futures, etc. But around 20% collapse. Yesterday, obviously, was up massively. Today, a big collapse, and that's really what you want to see if the market rally is going to have legs. And yields rallied really huge. TLT was down 2%. We'll take a look at the charts. All right. So first, though, let us pull up the intraday. That's me again. Let's do screen share of the intraday chart first. Okay, so S&Ps. You hit a high here at 2:30 p.m. of 5:30, I'll call it. And then VWAP here was pretty steady, nice and rising at 524. I really didn't want to see that hold, just to see where the broker, or the gamma traps were, as it were, and really where support was. I thought it was going to be at 424 and hold, but you had an ugly 330. Towards the end of the close, there were some more sell orders. Lets me know that I don't know if tomorrow is going to be a massive up 2% day, but we were massively oversold yesterday. The 200 bar moving average is still way up here at 538, which is a discount of $16 from where we are at 3%. So things should drift to the upside. I would not be getting very aggressive chasing downside here, to be frank. I think that 5,100 was the low. If you recall from my video 2 weeks ago, I will say when I'm right and I'll say when I'm wrong. I had said before, and I'll just literally pull it up because I am no liar. July 16th at the top, I said your sell-off should probably bring you down to 540. That's where I thought we were going to go. As you have a massive volatility expansion, which changes things, and to explain this in layman's terms, let's talk about the queen of pop, Taylor Swift, for example. If a ticket is going for $300 to get in, which is kind of not ordinary for typical shows, let's say, to get in, it's not unheard of that a ticket for a show can be $3,000. Once you have that volatility expansion, anything can happen. Literally anything can happen, and that's the environment we got in yesterday, okay? So let me zoom out here as you're looking at a SPY 1 year chart. So right here, I had said we were going to go to the lower band if things got ugly. Typically, but we had such a massive ramp up since April, so you can't just expect the markets to run for 3 months and just get a very small, not even garden variety pullback. So I had said, just straight up, I said if you get an uglier pullback, it's probably going to around 540. And then what happened is as we got to, which is right around here, you could see, well, more so here, August 1st. So Friday, we were really starting to talk about Japan having, and the dollar having a big move on Friday. That was in my note. You can look at the file. Then look what happens here. You see this blue start to expand. Then same thing as we were just talking about with the Swift tickets. Anything is possible. Prices are relative in that regard. Ultimately, I said, of course, but I thought this 200-day moving average was going to hold. It actually got clipped in the Qs, but a nice looking bar and rallied off of it. I think this is going to hold. This is a serious slope. You do want to see at least SPY hold in here. All that being said, I think this has a date with 540 in the next 3 weeks or so. I did do some buying. I bought Bitcoin yesterday. I was buying mega cap tech last week. So obviously early on those, but still getting stuff on sale. And, for the most part, we're long-term investors. In terms of the portfolio, didn't do a ton of moves. I was short IWM through put spreads, and I was glad I was because I think cratered. So again, a move towards 540 is where I believe, maybe 536 around there over the next 3 weeks, and that would imply a 540 from here is 18 points, right? So I'm sorry, it's just been a long day. About 3.5% rally over 3 weeks, 1% or so a week. Not really a crazy ballsy call. We're up 1% today, but I'm saying upward is I believe the direction we're headed. We were trying to get this flush, and that's what you got. The one thing to be mindful of, great looking 200-day moving average here, still rising. Your support's there, 500, okay? And those are prices that we first reached. I still think you buy this market. Trend is your friend, and I think it's still up here. The other thing I was going to say, it's similar to I was talking about Bitcoin, Mexico, when you see oversold conditions, it's going to exert a lot of energy to get this 3.5% gain to 5,400 or 540 in SPY over the next 3 or so weeks by the end of the month. So, I was quoting Business Insider saying new all-time highs by Labor Day. This, because of the volatility expansion and the route we had, even if we make up ground extremely in the next week, amazing earnings from whoever, Apple, or amazing commentary from Jackson Hole, Fed officials, we're gonna exert a lot of energy, in my opinion, to get off of this 510 print all the way to 540. So that's 30 points, 5% or so-ish around there. And then I think we're going to be range bound. Best case scenario, I think this is what's going to happen. You get to 540, maybe a little bit of a move lower towards 535, and then you start ascending higher. Also, in terms of seasonality, there's no really a rush to buy markets. August is pretty crappy. September's not, so wonderful. So you got a little bit of time before things really reverse strongly. Okie dokie. So that was the SPY. All that being said, I see bullishness accumulation through about on or around August 21st. I think it's not probably a horrendous time to sell puts. My IWM puts, I basically collected all of it today. I still have 3 days to go because it's Friday expiration. So don't think it's a horrendous time if you're okay to take on that risk. All right. Lots to recap. Let me see now. So let's look at today's moves. Some pretty interesting charts. Let's see why we're talking about them. So EWZ, Brazil, they bought in good size here, up massively. Brazil, not a great story. Rocco. Rocco's making some sounds. So Brazil, not looking too good here. This has been in distribution mode. I mean, I really want to say from July 16th here, this peak here. And that's obviously as well when the S&P hit a top. So they were just joining, the rising tide lift all boats. But this thing's really got hit to new 52-week lows yesterday when we were having our sell-off. So 29 to 26, it's pretty ugly. 3 points, a little bit more than 10%. Today they bought it 2.25%. Now what? So you got a bit, not technically oversold, but a little bit aggressive. You had a bar close outside the Bollinger Band, so a little bit aggressive to the sell side there. I see this being accumulated over the next 3 weeks to about 27.85. I don't think too much more. Maybe towards 28, and then I wouldn't say it's too much more from there. This was a big move for it. It did a lot in one day. Absolute tops, I would say 29. But not much more than that. But it's going to be interesting. Look for where the investor dollars go over the next 2 to 3 weeks after the route that we had. Does it go back into mega cap tech? Does it go into stuff like Brazil? Or does it go into things like real estate? Real estate also up the same amount as Brazil today. So take that for what you will. Up to and 0.1%. Let's see here. Brazil, so real estate rather, pretty interesting. So new 52-week highs. I believe that's an all-time high struck on Friday We hit 42.30. Looks very good. You barely know. I mean, someone should have told this that we had a mini crash yesterday, but things look fine. This looks good. I would probably want to buy around 40.40 around here if you're lucky. If you can space it right. I mean, it's been dancing with this level for about 3 weeks now, so I don't think it's crazy. It was there yesterday. It was there 2 weeks ago. I would like to be a buyer around 40 half, around there, and then sell around 42. So here, 41 double. I'm not really wanting to chase. This has, had an amazing rally, in my opinion, or not in my opinion, just numerically. July 10th through August 6th, 38 to 42. That's a strong rally after being range bound for a long time, and now it's getting some lift. Of course, with discussion of emergency rate cuts, which I think is hullabaloo. But you're going to get that 25 or 50 basis point, maybe 75, probably not. You're probably going to get 50 basis points September 18th. Okay, there's a 97% chance of the market implying that through the Fed funds and the CME watch. So that's real estate. Yeah, so that's the trade for me. If you get an entry around 40 half, then I would scalp and try and get out of it 42. Or if you want to be an investor, I would just try and get in around 40 half, and this thing will probably rise going forward. Nice looking chart here. I like that this 200-day is finally starting to pick up slope and overbought conditions from mid-July. So that's superstar profile, and real estate's been mega high. All right, let's look at VXX. A lot of people talking about volatility yesterday. Pretty wacky stuff. I read it was the third biggest volatility event after, I believe, 9/11, the 2008 crash, and this yesterday. Japan, I think COVID, and then this. Japan raised 25 bips. So does that make sense? Let's take a look. So here's VXX. Pretty wonky chart because of the the split here on July 24th because of such a piece of crapola. This is interesting. So an adjusted 200-day moving average still sloping lower. It's 50. Not to get in the weeds. It's 59. Okay, you want to see this, and I'll just be frank. I need to see this to confirm I know we're still in an uptrend in volatility. This was just a very, very short-term panic event. I need to see this close under 59, and this is a lot of leash, by September 2nd. It's just a rule that I've seen come true many, many, many times. I think it's going to happen. I think it's actually going to happen sooner than that. That was an ugly candle here, like knowing that I was going to go lower. It was one of those days where a lot of people from the woodwork, friends, your aunt, your uncle, do I sell today? It was one of those. Immediately, I started buying whatever. Not like in size, but I bought Bitcoin yesterday and stuff like that. And people buying VIX calls, like retail folks. And that's how I knew we were getting a little frothy. And I knew 5,100 was likely the low in S&P. We'll see if we're right. So anyway, this thing from July 12th, 52-week low. The price there was 40. And what did it do here? It went to 90. So pretty crazy, more than double. I think this is headed lower, gang, to be frank. And I think this is headed towards, so I said the level that it must close under was the 200-day moving average of 59. I think it's going lower. I think it's going south of 49. I think this could be headed to the low 40s, high 30s in a couple of weeks. You can mark that. I'm also going to be doing a little bit something different. I'm going to be putting together a written report. I was working with some different apps today that can help me on this. So I know a lot of people can't have the time to watch a 30-minute or so YouTube, even though it's for your finances and very informative. But I'm going to have a written report, and then you look for your tickers, and this catches your fancy, this whatever, and it might be more accessible for folks. So I'm probably going to try and do that actually after this video. So yeah, I see this cratering down to. It just makes a lot of sense to me for this to get to 50. Like, it's not crazy. That's 20 points. That's another 20% reduction or so. I think it's coming. That's going to be a breath of just fresh relief to the market. And it's interesting, just in terms of volatility spike, you had scares like this. I'm going to compare it to April. I forget the exact event, April. I think this was when we were trying to digest the higher for longer narrative. And then last October was a totally different complexion of the market, though. We were on 52-week lows and small cap, and bonds had a crazy move and so on. So I think this is going to prove to be not a correction. It was something we needed, so just a short-term correction. But in my opinion, you can't say definitely. But I don't think this is the beginning of a bear mark or anything like that. And so volatility was down hard today, and TLT was down very hard today because bonds got smoked. Yields ripped higher. So let's take a look at the TLT chart. There's also a lot of importance and wisdom to get from this chart. This is extended. This should not be trading up here. People buy bonds when there's absolute fear. And you see this, the blue expansion here, the volatility band, obviously bigger pricing, going, more crazy wide inputs. So this blue band is going to expand. Don't lose track, though, of the convergences, the importance of these lines here between 94.60 and 92.60. That's very important. Moving averages, especially in an instrument like this, are basically probabilities. We make money or lose money in probabilities. If I ask you 100 people are going to walk in the bar, for example, the restaurant, whatever have you, bell curve probability distribution of 80% of people or 2/3 of people between 5 foot and 6'3". Okay. When you're saying that this is going to persist and I'm going to see 101 print for TLT, you're basically telling me there's going to be several people, like 5, 10, that are going to be 7 feet. I'm going to call BS on you. I'm going to say that's just not likely. It's not probabilities. Same thing here, okay? And in terms of TLT being mad overbought, you saw this around Christmas week, and that's where it put in a 52-week high. TLT didn't do that. A lot of the 7 to 10-year stuff, the belly of the curve, did. TLT did not. So now what? I have different resistance levels calculated, and visually 96.5 is where I have this, like to the high side. That's very close to where we closed today. We closed at 96.59. Now what? I think this is going to move towards 94, okay, over the next 3 to 4 weeks, which is going to lead to what? Bond price decrease, yields going higher, and we'll see how the market digests that. It used to be a bad story. Now it kind of means different things, whatever. We'll leave that to the market to digest. Okay, this is something I was looking forward to do. Oh, when the AC shuts off, I don't have to yell anymore. I'm sorry, Rocky. You don't have to. Just stay. Just stay. He doesn't like me yelling. He's not one for finance stuff, I don't think. Yeah, I told you shouldn't have sold all that stuff yesterday. He was trying to buy like woof and just dog food nonsense. Okay, so top 5 gainers the past 5 days. This is interesting, and it's actually not that many changes from my Friday reports. It's kind of what you would expect more than not. Pretty much all defensive. Volatility up 37% in 5 days, and that's with the crater today. No repeat of the charts, though. So if I'm talking about a ticker here and the biggest returns, I'm not going to pull it up again. Now, TLT up 3%. This dang dog. Get out. He's a silly woofer. So TLT is the second biggest gainer in the market, up 3 1/3%. So you can see the dispersion there from volatility up 36%, being the best long in the market, even though it's anti-long. And then bonds are up 3%. So third, we haven't talked about this yet. Utilities, again, they're just flocking to defense type stuff. Risk off instruments. Utilities one. Utilities are up 2% in the past week. Don't like to see when utilities get above its volatility band. You can tell that is just straight up fear, and that's when it got pushed to a 52-week high. I think this has seen its, I don't want to say glory days, but I think this is going to be in distribution mode. That's a nice signal for me, being long stocks. So I think this is going to lead to risk on. I'm not calling for a massive crash in this, but I think this moves to 71.30, potentially $70. So yeah, I think this has a date with 71.5. So a little bit of a decline. It was up again today, so I'm not going to be the first one to say to nip it in the bud. Oh, Rocco, he came back. But yeah, I think a little bit of decline for this. Okay, the fourth best leader in the market is real estate, although it's a paltry gain, but that's better than some people have. It's up 1.2%. We already looked at this chart. And then the fifth biggest gainer in the market is XLP. Again, defense, consumer staples, your Walmart, your Coca-Colas, etc. XLP. Let's take a look at this chart. So this one's a little bit different. I actually like this one. It's probably also more revenue producing firms in here with growth versus the straight up utilities, and that's more of a rates play. I like this. If you can get in XLP in terms of diversifying your portfolio and not just having, mega cap tech or Bitcoin, for example, or your semis, if you can get in here at 78 even, I kind of like it to 80. So not a terrible trade. It was up today, 70 bips. That could be a good way of adding a diversified instrument. Also, some really low vol classes were moving today nicely. Not in multiple sigma perspective, but they were gaining, and that's something to be not to sneeze at. Okay, top 5 losers of the past 5 days. Bitto, the worst trade in the market, okay, is Bitcoin, down 20% over the past week, 5 days. All right, and today was up 6%. It had monster rip today, very nice move. Let's take a look at it through Bitto because this is registering the biggest loss, down 20% over the past 5 days. So that's no joke. So 1, 2, 3, 4, 5. So as you can see, last week this thing was trading 23. We closed at 18.5 today, and that's with the rally. So this thing fell all the way out of bed, outside of its lower band. It does it sometimes. It's not like the S&P where it does it, 3 times a year or so. But this is something that's concerning about Bitto. It's different charting for because this is a different how they do the futures borrow in this, for example, versus BTC USD. Exactly. But basically, through this instrument, because this is the one registering the losses, I don't like the fact that it's under its 200-day moving average. So I'm going to give the same rule for this, the 1 month. It's not good. I wanted to see this recoup by July 24th, 75, I think is what I said. July 24th, where did we close? Oh, wow. We closed at 22.96. So it technically gets started again. I'll give you that. And now fell out of bed. So that gets restarted. So this has to be, if I really want to be continuing to be long Bitto, August 30th, I want to see this above 23.70. So this has to have a big rally. All that being said, I'm a little fearful. I don't want to say that it's up and away from here. This could have a little bit more downside. You're getting a volatility expansion here. You see the blue expanding. I don't think the bad days are done yet. A good sign today. All that being said, I think this is going to make a move towards about 2190 or so, 2180 over the next 3 to 4 weeks. And that would be a move of 2190. I said 340. Yeah, it's about like a 18% or so move in Bitcoin. So we'll say. So I'm expecting upside. I don't know immediately in the short term, in the next 24 to 72 hours. But by the end of the month, I think this is trading about 15 to 20% higher. Okay. Don't forget, when I did my analysis Friday, best trades of the year, it was still Bitcoin, short nat gas, short vol, long semis. Those still are pretty much as of today. I don't think you want to escape those still prevailing trends, secular bull market, tech-driven gains. Yeah, so that's all for Bitcoin. Of course, next biggest loser, the DXJ. We were talking about this Friday. It's kind of made me laugh yesterday on CNBC and all this stuff. They're like, oh, this big carry trade, the yen dollar trade. No one's talking about it. We literally highlighted it here on the video Thursday or Friday as the Japan weakness. It wasn't that, not like an investigative reporter. The Nikkei was down 6%. But then the U.S. dollar was having a massive move, that multiple sigma move, which caught my eye, hence why we put it on the port Friday. All we talk about in these videos and reports is stuff that matters. I'm not talking about like nonsense crap. I'm not talking about that, like, no offense, like Goodyear or something like that, or crap companies like Bath and Body Works hitting 52-week lows. I don't care about stuff like that. We're talking about big macro stuff, and then we can do your bottom-up investing from there, and so on. But what I work on is macro stuff that gives you real inferences and importance of information and things like this. Okay, so let's look at the DXJ. Again, this is hedged equity, so it plays on the dollar yen. EWJ is no hedge on the equity. So this hit its 52-week high, an all-time high, I believe, July 10th, 6 days prior to the S&Ps. So pretty similar. And then they raised their they raised 25 basis points, and now we're under the 200-day moving average, which is kind of still rising. It's kind of stuck at 101.20. Same rule for this. It cut below here. I give Japan, specifically this GXJ, it has to be by September 2nd above 101.20. Okay. If not, it's going to have a hard time. It's going to exhaust a lot of energy to get to about 100, and then it's going to be the range bound here. I don't like, well, that might be a capitulation. You had less volume here, about 1.6 million shares, and 3.4. And then yesterday was just massive blowout with 6 million. Usually not a bad sign. Not a huge gainer today, 0.6. I know you saw like topics in the Nikkei up like 9% today, massively. But yeah, this has some work to do. I think this is going to be in accumulation mode, but to I think it's got, I want to see how it travels to 101. I also have a lot of, there's a very good possibility this gets to 104. That's a monster move of 12 points or 10%. I don't think it's going to happen overnight. So first stop 101. That's still not that close away. It's $9 or 10%. Let's see how it gets there first. I think it's going to try and chug along there over the next 2 weeks. All right, uranium, the third biggest loser. All right, we were talking about this too. So uranium, we have the same rule for this. Let's see if we have to reset it or not. Uranium started closing below right there, July 18th. Yes, I remember this from memory. I said August 18th. It has to be back above 29.10. It is not around 29.10, and then I give it 12 days to go. We'll see. It might be there in a perfect tag. You'd be surprised how this stuff works. This thing was up 70 bips today. It's had an ugly fall, as I said, down 11% over the past 5 days, on an average of 2% a day and change. Look at the chart here. Yeah, that's quite a vol expansion. You see this, the blue expand, the Bollinger Band, usually not that big here. Just look at it in the 1-year history. Okay. Stochastic momentum mix doesn't look like it goes any lower. It's actually bottomed here in July. It's bottomed here in March and in October. So in terms of the velocity to the downside, this is kind of what has been pegged, about 4 or 5 times this past year. What I don't like to see here, we were calling for this last year, last time we talked about this in the video. When you hit your high in May, so that's now 3 months ago, the inputs, the prices, the closing prices that are getting in are going, technically lower and lower, as you can see the lower highs here. And that, what happens here, we registered an oversold reading. Obviously, it's like really crapped out. 28 to 24 in 4 days is pretty ugly. And this is typically loser behavior, typically changes sentiment and investor views of an asset. And also, this was a superstar back in last September, overbought. It's been range bound the entire year. Almost reminds me of regional banks. Regional banks has been range bound for a lot of time. So you really have to take note when something's overbought. China last year, when it was getting the crap kicked out of it, was range bound. So you got to really be careful. We were all calling it a dog. So when you have something like this, it can really be informative. All that being said, it's not a total dog. I think this is going to try to mean revert. First step, 26. Okay. And then I would say towards 28 and then 29. I think it makes a move towards 26, 27 over the next 2 weeks, uranium. Okay. All this tells me is I'm seeing a lot of risk on stuff. So, volatility expected to crater 25%. Bonds, we're saying that they are where they are. Utilities are too rich. Sometimes mixed messages, consumer staples you want to buy, but in terms of maybe some broadening, Bitcoin, we're seeing a monster gain up ahead. Japan, potentially a big gain up ahead. So this is telling me it's more so I'd rather be long than short. Uranium to the upside. Let's look at another area. So the Jet airline got hit pretty hard, down 10% over the past week or past 5 days, up to 2% today. Talking like Elmer Fudd. I should just slow down. Rocco fell asleep. You not entertained? He didn't even bark. Okay, so airlines, yeah, this thing's been getting decimated. It's been really straddling its 200-day moving average, really not even doing anything. It's stuck at 19, the 200-day moving average, so now obviously on discount. This thing was trading 19.20 just a couple of days ago, and it sank all the way to 16, hence your 10.5% decline. Now what? I think this is going to start moving towards the upside. I think this wants to go towards 1875, and that's what I'm thinking for the next 2 to 3 weeks on this. So 1875 is a move of 1875 is $1.60. Yeah, that'd be a big move. I don't know if it's going to do all that, but maybe like an 8% move in this. They can move 2% today alone in one session. I'm giving you 2 to 3 weeks, which is 15 sessions. So that's what I'm thinking, but not in an area that I would love to be in. It just straddling this 200 moving average, oversold, still oversold today. We'll see if it rips to the upside. This thing can be oversold for a long time. It was actually oversold for quite a chunk of last fall, straight line down. This is when the market really had problems, when we were on the lows. But this thing is not just a love area. I'm not really interested. And then lastly, ARK, the 5th worst place to be in the market. So again, from this whole sell-off, it's pretty interesting. The past 5 days, and that's a lot of the chunk of what's been going on. It's been the worst areas: Bitcoin, Japan, uranium, airlines, and ARK. So ARK, Tesla, pre-revenue firms, interest rate sensitive firms. Let's see what I see for this. If I think this is going up over the next 2 to 3 weeks, it's risk on, especially for a fledgling name like this that had its highs put in all the way back here Christmas week. All right, goodness sakes. So let's see. This thing's been hit 10% in the past week, up 1.5% today. Similar moves as you're seeing from airlines and otherwise. Yep, an ugly candle, several here underneath. Very steady and confluence of moving averages here, right around 45 to 47, depending on the time frame. I think this, believe it or not, I think this is getting accumulated over the next 2 weeks to about 44.75. Right around here, 44.75 would imply, so that's a move of 440 or about 10%. Yeah, that would be risk on. That would mean Tesla's going up, Amazon, so on and so forth. So again, a risk on instrument to me, a read for me. All right. So the best 3 absolute trades of the past 5 days. If you were if you were long volatility, short Bitto and short DXJ, you absolutely crushed it. We've been talking about this, specifically these trades that you can trade on. All right, so we'll see what happens tomorrow, and I'll have another report and video later this week. Enjoy. Bye. See you next time.